Do you worry that either there's going to be a change in finance minister, or actually, there's going to be anxiousness in the markets when it comes to bond yields again?
Well, that's the question, is financing it. I mean, there are certainly positive elements to the program that they're putting forward. Very supply side oriented, flat tax, investment in infrastructure, deregulate, all these things, all very positive. But the only factor I heard about paying for it was the doing away with tax expenditures, tax breaks. Of course, whenever you flatten a tax code, you got to take away all these deductions and all these things. And yes, that can pay for some of it. The question is, will it pay for all of it? So I think they still need better detail on how they're going to hit this 1.5 to 1.75 or 1.8% deficit to GDP number. But, yes, tax expenditures will help, but what else?
So do you like Italian assets? I know you're a big investor in Intesa, and on the panel you were saying that on the dip during the summer you actually took a little bit more of, I guess, Italian exposure.
Yeah, because we didn't really feel that the fall in price, specifically of Intesa and earlier of CNH on the trade wars, was really indicative of the underlying intrinsic value. In fact, we didn't see a real dip in intrinsic value at all. And of course, these assets dropped 20-25%, and in US dollar terms, over 30%. So they became very attractive to us as a result of the abrupt fall in price, and excluding, there was no corresponding fall in intrinsic value in our view.
But we still have a populist government in Italy. So if we have the rhetoric of actually, we'll flaunt EU rules and the markets again become anxious, do you buy on the dip once again, or do you sell?
I think that the populist government doesn't really have a lot of choice to flaunt the EU rules, because they know the program will depend on having to invest, and that means raising money via the capital markets. And if they keep flaunting, their price of investing and the price of financing will keep going up. And I think they understand that. It appears they understand that.
David, you are expert at the cross-border dynamics of Europe. Can the rest of Europe come to the rescue of Italy capitalism through mergers, acquisitions, combinations? Do you see that happening?
Well, this, Tom, was one of the topics we covered at the panel today, was the need for, if Europe is going to have a unified financial system, there needs to be, of course, consolidation in the banking sector. However, you have to ensure that you have the banking system in place before you do the cross-border consolidations. Unless you have a unified banking system, the consolidation won't work. Who wants to buy a bunch of local banks in a different country if you just have all these separate banking systems? So until you see a more uniform regulatory environment, a more unified European banking system, it doesn't make sense to have consolidation cross-border. You could have consolidation, as you've seen within Italy, within the border, and that does make sense. In fact, all of these European countries, individually, perhaps we do, before we do cross-border, we need more consolidation within the countries. And then, and only then, if we have a more unified banking system, should you see cross-border.
Well, within the cross-borders is the idea of what to do. Are you buy, hold, or sell as a general statement on EU banks? I know we're going to talk about this in about 20 minutes, but is David Herro long EU banking?
Yeah, we're generally long EU banking, but very selectively. As you know, we're very bottom-up investors. And these companies need to meet our value criteria. So very big positions in BNP Paribas and in Intesa Sanpaolo and in Credit Suisse and across the channel in Lloyds Bank, what we think are really high quality financial institutions which are well capitalized, which are poised to do quite well when interest rate normalization happens. In fact, they're doing quite well without interest rate normalization, and they're all trading at extremely low valuations based on a lot of this macro noise. So we think if you look around the globe, one of the last big pockets of equity value is in European financials. But we, as bottom-up value investors, are selective. We just don't buy a basket. We look for what we think are the top performers.
David, thank you so much. David Herro there of Harris Associates.